Okay. Let's get going. Happy August. Happy first Cake DeFi Twitter space of the month. Tune in either here on Twitter or afterwards on YouTube in this recording. Very much looking forward to today's space. We have quite a few topics to discuss. Obviously, we have one of the most bullish months behind us, both in crypto and both in the general markets. Obviously, the question is this going to be a recovery rally or is this the actual start of a bull market? We have a very important week behind us last week with the Fed, GDP numbers, earnings. We discussed this in the last space, in the last recording. And obviously, over the last 2 or 3 days, especially over the weekend, we do have a completely new development here in Asia. Nancy Pelosi, Speaker of the House, is supposed to be visiting Taiwan tonight. She was visiting with a delegation of about 6 people. Singapore, they were here yesterday. Today in the morning, they were in Malaysia. It's just a super short hop over from here. And then, yeah, I'm visiting Taiwan tonight. And this may actually cause quite some conflict. Markets are reacting to that. General market is down. Crypto has been down. And yeah, this may be an important topic for discussion. So we're going to look at all those things and then see how everything is going from there. So drop in. If you have questions, simply tweet at us. And obviously, if you are watching the recording afterwards on YouTube, then yeah, just you can drop us comments, questions, and we can answer those in the next couple of videos. Also, a couple of things, updates on the Cake DeFi site. You should see a couple of new product launches this month. We had to push into Q3 a lot of the things we had planned for Q2 simply because of the entire turbulence. One of those things was people were obviously quite concerned about making sure that we don't have the same kind of fate as many other of the lending platforms had. So we stepped up those efforts massively. One of those things is the transparency page. So if you go on our website, you can simply see the transparency site, and it's really well done. So I can highly recommend you checking this out. You see this for all the various products, so you can simply go there, and then yeah, you can see here in the right upper corner, you can see transparency. You can scroll around. You're gonna see this for staking, liquidity mining, lending, everything that's in there for the borrow product. So all of this, and this should be like with full transparency, also our past transparency reports. And yeah, this should really kind of help you with a lot of the yeah, support and trust. And yeah, I think that has really also paid off. We had to delay a lot of the product launches because of that, but at the end, this paid off. We had a very strong months of June and July, which were actually quite bearish for the entire market, but we had massive growth, massive fund inflows, and so this had paid off there. And then the other thing that we launched product wise on the platform is this one-click freezer, which was something that people had really looked for and asked for, because this is basically what you need in order to claim the bonus. And so we made this very simple now and very straightforward. And so just wanted to highlight that a bit. I don't know, Fabio, if there are other things that we need to highlight here before we talk a bit about the markets. By the way, welcome. Thanks so much for doing this. What else is going on in the community?
Yeah. Hey, everybody. I think everything is working. Yeah. So we should maybe we can also go into a super short reflection of last week. We talked last week was a big week on the macro landscape. We had earnings of I think 4 out of 5 FANG stocks. We had GDP numbers, and we had inflation numbers. And we had the Twitter space right before the inflation numbers on Tuesday, so like 6 hours after the inflation numbers came out, and then we had GDP approximately 36 hours later, and a few earnings that were released. Maybe we can also reflect a little bit on what we said last week and if it was accurate or not. But on the community side, there's not a lot to share. Like I always say, it's super quiet at the moment within our own community, especially on Telegram. And that's usually a very good sign because when we experience high volumes, there is usually something that is not working correctly. And at the moment, our volumes are way down. People are just enjoying a flawless service practically, which makes community work super easy.
Definitely. Yeah, let's then reflect a bit. Pulling up some of the numbers here. This is the Fed came out as expected, 0.75% increase. I think this was really, as expected. And I don't think the market had, honestly expected much different. So I think nothing to be proud of ourselves. It's quite straightforward. What is important though, and I want to maybe highlight that a little bit before we go then to the GDP numbers that were also released, obviously with a little bit surprise or twist on the recession. The Fed was relatively cautious in giving future guidance. And I think that's important to highlight here. Because in all the past meetings, the Fed did give some guidance where it was like, okay, next meeting, we're going to be a bit more aggressive. We're going to be a bit more cautious on the raise. We're going to be a bit more hawkish and so on. Zero guidance. So it's going to be interesting to see now. We should have, I think, 2 weeks of various Fed officers kind of walking around and giving statements and giving talks. One has to also say that the meeting was signed off unanimously. So obviously all the various Fed officers, they're quite aligned in their opinion in how they want to tackle inflation at the moment. Again, also Elon Musk came out, I think last week, and said that he sees prices falling. We do see this pretty much across the board right now on commodities. Obviously, retail prices haven't been affected on that yet, but this may always be a bit of a delayed kind of effect. Let's see that. And then obviously the next big thing that happened right afterwards was, GDP announcement. I don't think there was much surprise that GDP fell in Q2 by 0.9%. Obviously, what was a bit of a surprise was that, and everyone kind of played along there, and I think that was a bit weird, that everyone said this is not a recession. Jobless claims are way too good for that. The economy is still super strong. Both are things that I see relatively critical. So those are things where I'm actually expecting Q3 to be quite detrimental. I think we're going to see jobless claims in Q3 going to be a bit down spiraling in a sense where we're going to see more jobless claims. I think people right now are still a bit too optimistic. And I also think that in general, the entire economy, people are going to see a lot more pessimistic. But that to me was a bit of a surprise here. One has to say, though, that the earnings pretty much across the board were extremely not strong, but extremely better in comparison to what people had expected. We saw this on tech. We saw this on the financial sector. Obviously, we saw this in the traditional markets. It doesn't matter which kind of company you looked at, especially Apple, very important. Obviously the growth here doesn't look so large, 2% revenue growth. That doesn't look so strong right now, but as a whole, it was. And all of those factors at the end kind of led to the entire market really jumping. It was with the GDP numbers, it was with the earnings, Fed, all of that made it jump. And so the interesting thing on the jump, right? So some people then said, the jump was only because for the very first time in a long time, Tether had actually increased again, I think by close to $500 million. So that's how much more USDT were in the market. So people were like, is Tether printing or is there actual demand? So this could have been that strong pump here as well. But then others said, actually the numbers and all the results don't look so terrible as some people had expected. Or, and this is the other kind of side, it's so terrible that people actually expect a serious recession and they actually expect the Fed to reverse their course and start lowering their rates. This was, I think, quite interesting. Also, just to look at a bit at the macro numbers here. When you look at inflation protected bonds, they are called TIPS. When you look at those, for the very first time in a long time, they're actually trading or their yield is actually positive again, right? So that means that these tips for the very first time in a long time actually outperform inflation. And that's what they should be actually doing. That's how they're designed. And so that jump up also kind of highlighted how people for the maybe first time actually start thinking that the yield that the Fed is kind of going for, the interest rates, could somewhat be aligned. So not that it's aligned at the moment, but could somewhat be aligned in the future with what's going on with inflation versus Fed rates, and how inflation until the end of the year could kind of counterbalance. So I just thought that was really interesting as a whole kind of macro play. And for me to finish off, and then I want to see what Fabio then here has to share a bit. Bitcoin, or the entire crypto market, rewarded us with, first of all, a positive monthly candle of July. Obviously, the entire general markets did really, really well in July. I think one of the strongest months I think since last year, whatever. So it was like a really, really, like I think since October, November last year, I think October, which was one of those super rally months. So I think that was quite positive to see. And also the 200 weekly moving average on Bitcoin for the first time again in 6 weeks. So 1, 2, 3, 4, 5, 6. So in 6 weeks, seventh week now, again, above the 200 weekly moving average. Right now, we're just kind of tiptoeing around the 200 weekly moving average. We're going to discuss this now a bit. But so, yeah, obviously emotions getting a bit better, people becoming a bit more hopeful, people talking about, is this the start of a new bull market? And we're going to discuss this now a bit. But so this was just kind of a bit of the reflection. I don't know, Fabio, if you feel I missed out on anything there that you would love to add.
Yeah, so it's really amazing to see how efficient markets are and how forward-looking they are. So we were talking about this last week, that very likely both the GDP and the inflation numbers and also earning is already priced in. And it's for me an amazing thing to actually experience. Like the last few years were the first years I was really following all of these announcements, listening in to Jay Powell talking live when they made the announcements, and all of these things they seem to be priced in. When it comes to the sentiment or the people talking about all of these points like GDP numbers and so on, and is the Fed maybe pivoting or not? There are a few interesting polls that I was looking at. So I refer to Benjamin Cohen. He's a big influencer, and I like to follow him because he makes really good polls and he has a really big data set. Usually his polls are 40 to 50 to 60,000 people participating in those polls. And he asked, a few days ago, he asked, is this a bull run or a bull trap? And about 80% of the people said this is a bull trap. So they feel that this is kind of a relief rally that is going to top out in the area where we are right now, maybe slightly higher, 25 to 30K. And then we are going to see lower prices, so trapping in the bulls and then going lower. And what is a bit crazy to me is that we are just hanging out around the 200 weekly moving average, and that as so many people are actually bearish. They think, okay, maybe we are going to see a recovery rally, maybe we're going to see a relief rally, but in the end, prices will go lower. So the sentiment right now actually seems kind of low. And maybe to the point that you made earlier, Julian, is this a recession? So this was the White House changed the definition. There were some attempts and edits on the Wikipedia page where it's like, what does it mean to be a recession? And I think this is a discussion that you can have because, as Julian mentioned, the jobless claims and unemployment and so on, they're actually pretty good for just defining a technical recession by 2 consecutive quarters of negative GDP growth. But something I see a lot when these discussions happen, so if on broader crypto Twitter or Bitcoin Twitter, what a lot of people seem to bring up as an argument that things are not in order are the bond yields. So maybe for everybody that doesn't understand, you have something that's called a yield curve, and the yield curve is you have bonds that go from 1 year to 10 years to 30 years, and it's a yield that should increase because the longer you are participating in a bond, so a 30-year bond should yield more than a 1 year bond or a 10-year bond because it's a longer time, it's more risk. And what these yields practically are, if you just look from a basic perspective, is it is how the sentiment of investors is to the economy. If the economy is doing great, if you look forward and you have a good feeling about the economy, the 30 yield should yield more than the 10-year. But as soon as the 30-year is coming down in the same range as the 10-year or at the 1-year, it's practically people saying, I don't trust the future. And this is all is like a barometer of how well the economy is performing or what's the sentiment of the next decade or two. With bond yields, there you could make an argument that the market is pricing an uncertain future. The employment numbers look great, and we kind of pumped with the announcement of the GDP numbers and the inflation numbers. So all of these things are priced in, but there is for certain a general uncertainty when it comes to long tenure bonds, which I find kind of interesting.
Yeah, and I mean that example about yields and the yield curve, it's actually a really relevant example to us as well as a company. To me personally as well, but from a company standpoint, that's what I want to share. A part of our treasury is in dollars, and we mentioned this a lot. And obviously, those dollars, we don't just put them on a bank account and they just sit there. So a lot of it is actually tied to bonds or to the yield curve and so on. So it was very interesting because we actually just had to roll over bonds last week, and it was so interesting. Our VP of Finance, Ping Lai, he was like, "Julian, should we roll over right away, or don't you want to wait until the end of the week and then we roll over because maybe the yields changed?" And it was really interesting because there's quite some difference. I mean, even like a 0.2% difference on a very large number can have a very big effect. So it's quite interesting when you have to do this treasury management, and gladly we're a really good team on that. But there is actually quite some impact on that. So we actually saw that impact live. So it's not just a theory where you look on a graph or on a chart. It's actually where you as a decision maker sit there and you think, okay, what does this now really mean? This is not just some social media gimmick. This has real impact on the treasury. And so I thought that was quite interesting on that curve. Yeah. So yeah. Then obviously over the weekend, a lot of it changed, and that also, if we look at the prices, we can just kind of look at what's been happening in the markets. So let's pull that up really quick, and then we can look. So this is general markets. They have turned red pretty much across the board. So it doesn't matter if we're looking at the S&P or the Dow or the Nasdaq. Also, oil now went down, gold went up. So this is always a very curious kind of sign, right? So when you looked at, for example, the Ukraine conflict, there it was a bit different. Stocks were down, gold did okay, oil shot up, so it was a bit of a different kind of picture there, right? So this time oil is going down. So the conflict right now, the issue right now, cannot really seem to have an impact on the kind of commodity side of things here. So it must be something else, right? So that's quite interesting. Then obviously we can look at, let's look at bonds here, 20-year Treasury US bonds. They have been up yesterday by 2.41%. It's actually quite a lot. And then today, again, pre-market up almost 1%. So this is quite significant. I mean, we're talking about massive, massive numbers here. So you must be wondering what's going on in all this. We look at the crypto side of things. Crypto has been down over the last 24 hours, right? Bitcoin has been outperforming again. The other altcoins over the entire month of July, Bitcoin has been massively underperforming. If you look at the Bitcoin dominance, I think at its peak over the last couple of weeks, I think it was close to 43, 44%. Now it's under 40%. So Bitcoin really underperformed in July. Now in August so far, it's been outperforming again. So generally that means there's some fear and some pessimism coming back right now. And so, well, where's this all coming from? I mean, it's the entire title of that Twitter space or of that video if you're watching on a video. Well, it is Nancy Pelosi, Speaker of the House, who made this announcement that she's on an Asia trip, and she is actually visiting Taiwan. And this has been a very questionable visit. And I don't want to go too far into the politics here. And I always want to, I also respect Singapore's position here. I always feel Singapore always having this very neutral stance. For example, I mean, if you think back when North Korea met the US with Trump and Kim Jong Un. All of this happened in Singapore as well, because it was always kind of this Switzerland of Asia. And so I want to keep that neutral place in all of that. But so, I mean, that debate has always been whether Taiwan falls under the Greater China kind of region or belongs to China or not. And the US, I think, doesn't really care so much about this. They make it a bit of a virtue signaling around that. What the US really cares about is the semiconductor industry, which is all about the chips, which is needed in literally everything. And a lot of this gets produced in Taiwan. And so Nancy Pelosi, I think, is quite a questionable kind of persona for two reasons here. First, because she's doing that trip, and there has been, even the White House has denounced that and says they're not really sure why she's doing it, but has also tried to downplay it a bit. And then if you look on the Chinese side, China was very, very, very clear in that stance, stating China has repeatedly expressed its serious concerns and solemn position to the United States that it firmly opposes Pelosi's visit to Taiwan. If the United States challenges China's bottom line, it will be resolutely countered, and all the consequences arising therefrom will be entirely borne by the United States. So a very, very, very clear statement here from the US, from China, and Nancy Pelosi still goes and visits Singapore. Yesterday, this is not the questionable part. Malaysia this morning is also not the questionable part. The questionable part is tonight. I think she's supposed to arrive in Taiwan 10 p.m. local time or something. And yeah, there are now rumors that, I don't know, maybe she's going to be met with actual force, that the U.S., that China is actually not going to let her enter the airspace. Quite some doomsday kind of scenarios and all this. And then on top of that, Nancy Pelosi was in the news over the past couple of weeks with supposed insider trading, either by herself or by her husband, especially with, and that's now the really difficult kind of part, with NVIDIA, in this case with basically a chips manufacturer in the US. And so now there's just this massive question on, why is Pelosi going to Taiwan? What is her interest there? Is the interest that she's trying to convince companies moving from Taiwan to the US? Is it more of a bigger picture that we are not seeing here? Is there some insider or some very secretive kind of mission that we are not really aware of? I tried to talk on Twitter today to a couple of people. No one really knew. I tried to WhatsApp with two friends here in Singapore if they have any kind of insights, but it's, I don't know. It's just the general kind of talk. So from my point of view, right, I sit here and I'm like, man, to me this sounds like a massive kind of risk that the US is kind of taking up here, and I don't understand the upside. So either this means that Nancy Pelosi has some personal interests that we're not aware of, or we just don't see the bigger picture here, in a sense where either the US has way more at stake that we're not familiar with, or they know that China is just bluffing with their kind of sable rattling, and it's not really some substance behind it. I don't know. Very, very difficult, and I think that's why the market is really kind of panicking a bit. Is panicking is maybe a bit exaggerated, but it's just getting a bit nervous in all of this. And I don't know, Fabio, if you have seen anything else on social media. I think it's a very tricky topic as well. Yeah, I don't know what you have seen or read or heard about all that.
Yeah. So in situations like these, that Twitter kind of burns on thought and fuel and fake news and misinformation. And most of you that spend a lot of time on Twitter, you already know that it also depends a little bit in what kind of echo chambers you are. But on my newsfeed, I saw all kinds of things that, in my mind, are not factually true, but still get a lot of engagements. Like that Taiwan is having the biggest emergency drill since their country's history, that China is secretly mobilizing their troops. And please, this is not, I'm not stating facts here, I'm just stating what kind of news that I came across on my Twitter feed. And in situations like these, it's the same as with the Ukraine-Russia conflict. It is really hard to distinguish what kind of information is a trusted source and is actually factual, and what kind of information is is fabricated or is just here to create engagement and engagement farming or false or fake news. And there's definitely something brewing, and a lot of people talking. Like I remember Raul Paul, for example, talking about this 2 or 3 years ago, that there is a potential conflict arising in Taiwan, and it's from a Chinese perspective. I think it's mainly the thing that you already mentioned, chip manufacturing. That is largely, I think, with I forget the name, TRMC. I probably butchered the acronyms, but this is one of the largest chip manufacturers located in Taiwan, and I think also it's a little bit similar to the Ukraine-Russia conflict. It's geographically it is very well located for China. And there's definitely a potential for a conflict there, but how far along we are, it's hard to say. But the Nancy's visit is definitely putting some more fuel into the discussion. But I really try to stay out of these geopolitical topics, because for me it's super hard to distinguish what is actually happening and what is probably fake news.
Yeah, I mean, where I do see a big difference, though, right, and I think that's I think that is essential to understand in all of that, is that in the Ukraine conflict, it is basically Russia invading Ukraine. Here, the conflict actually happens to be between the number one country in the world, which is the US, and China. So it's, in my opinion, very, very, very different, which has obviously it has the ingredients for some really explosiveness. And I think when people talk about saying, well, the Russia-Ukraine conflict is way more of a diversion that the US has set up in order to kind of hide a bit what's happening with inflation, and hides a bit on all the kind of mess that's going on in the US. And now suddenly you can really focus on that Ukraine topic, and it kind of helps to unite some of the people in the US and get some voting power and so on. So I think it's a bit different here, where like the aggressor, and again, even in Ukraine, it's not as clear, I think, how much, for example, NATO has of an impact on that conflict. But I think it's very clear from the outside that there's one person that has like really taken action, and that's Putin. And it doesn't matter if someone defends Putin and says, well, he just got kind of pushed into that. At the end, it's him striking first, and that causes some massive issues in all of it. In a China-US conflict, there it becomes very different, because there you have to look from the outside and you say, well, China has made it very, very clear what they're tolerating and what they're not tolerating. And for, I think, 20 years or something, the US has respected that, right? I think for the 20 years, there was no senior government official from the US who visited Taiwan. And so why now? Why is why is she doing this? Why is it not President Biden? Why is it not the vice president, Harris? Why is it her, right? And that's just quite, to me, a curious kind of move. I think it's very tricky to explain that or understand that from the information that we have at the moment. Maybe at some point this is going to come out a bit. Maybe we see the motives a bit down the line. Also, I want to highlight a couple of things here, or explain a few things. I think it's very dangerous if you're trying to trade any kind of geopolitical event. I think it's very difficult to trade those things. If you look at Russia, most people would have gotten totally burned trying to trade Russia, because the trades that you would have had to do in Russia, you would really have to get the timing right. For example, on the commodity side of things, commodities are now lower than they were at the beginning of the Russia-Ukraine conflict, right? The ruble was the currency to buy during that time, which is also very counterintuitive. And so it was really, really difficult. And I would be very cautious right now to do kind of the same thing and try to maybe say, oh, I'm going to short the market now, or I'm going to buy the VIX, or I'm going to, I don't know, go all in gold, or you know what, that's going to be really good for Bitcoin, or that's going to be really good for this stock or for that stock, or I'm going to short this or long that. I'd be very, very careful in trying to time those geopolitical events, because most of the time, neither you nor I nor, people that actually have a voice on social media or something have all the best insights in this. And I definitely don't. and I admit that. So just be very careful if you listen to people who tell you that they have the insights. 99% they don't. And those people that really have the insights, they are not going to open up because they're going to move the chess pieces. And it's just very difficult from the outside to understand how many moves ahead are these people thinking. Always remember, I try to mention this all the time, only put significant purchase power into games where you A, understand the rules, B, understand the players, and C, you really, 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 really understand how to play that game. And the problem is, most people, they walk up to a table on the casino, have no freaking clue how the rules are played. They don't even understand the game. They don't understand the other players, but doesn't matter. Let's go all in, YOLO. Like, I can get lucky. And sure, you can get lucky, but most of the times you won't. And that's just a recipe for misery. So just be really, really careful if you're starting to allocate like significant purchase power onto these bets here, just because you probably don't understand the other players, you don't understand the game, and you don't understand the rules. And I would just be very cautious in this. So these are just a couple of things I wanted to add here. I want to show a little bit of some charts, but I don't know, Fabio, if there's anything that you want to add to all this. No?
No, I think I read a lot, but I would love to. The one thing that we discussed in the beginning, maybe we can shift in a bit the discussion into inflation, deflation, and also what Elon Musk brought up on Twitter. I find that kind of interesting, and this is also something we touched on many occasions during the course of this year.
Go, I mean, let's bring it up right now. You can. Let's bring it up right away. And I mean, I have 3 charts I want to show. It's a bit more on being careful in calling this like the start of a bull market, even without this potential conflict of Taiwan. I think we've mentioned this a couple of times. But let's talk about deflation. Let's talk about Elon. I'm gonna hand it over to you here.
Okay. So maybe for everybody that was not following, I think 2 weeks ago we had a Twitter space where we only or practically talked about inflation and deflation and what is currently happening. And I think there's a lot of confusion currently in the market that all of us, we experience rising prices. Is it energy prices, fuel, gas, things in the supermarket like butter or bread, things are a lot more expensive than they used to be. And what is important to understand is there is a small difference between inflation and price increases. It doesn't, not both are the same, but they feel the same. And what Elon Musk mentioned and what Julian brought up in Twitter Spaces earlier is that we could finish off this year in deflation. So that and it is important to understand, like Elon Musk just pushed out a tweet and he said he sees that a lot of the supplies that Tesla uses to fabricate their cars, they are getting cheaper again. And some parts of the inflation that we're experiencing and the price rises that we experienced are due to monetary inflation, to the money printing and stimulus checks and so on. But others are due to constraint on supply chain issues. And I think especially the ones that Tesla is experiencing, they are due to problems with the supply chain. And there is an effect. I'm still learning about this. It's like this year, it was the first time that I really got into this, but there's an effect. It's called the bullwhip effect. And this is not the first time that this is happening. And this is on topic of supply chain issues. This is practically when your supply chains break down, you either have an empty storage house or a full storage house. So these are the 2 extremes, and the bullwhip practically goes in between. Because when you have an empty storage house, what you're doing is practically, if you're Walmart or if you're Amazon or whatever, you're trying to increase your supply. You're trying to get your storage full because you have people that want to order things and you don't have them. So you get your supplies full, and at a certain point, is your storage house is absolutely full, but you cannot get rid of the things that you have in storage. So the thing that these effects develop is when your storage is full and you cannot get rid of them, you need to lower the prices. You practically need a sale to, and this is like a bullwhip that goes up and down. Probably you can explain this a lot better than I can, but it's definitely, for me at least, one of the more interesting things to follow along this year, because it's the first time for me in my lifetime that I experienced this, and I'm learning along as we go. But I'm very interested in what you have to say over this whole development.
No, I fully agree with you, and I completely tag along on this. I really think that the switch between inflation, deflation that we may see later this year, or maybe beginning of next year, it's very difficult to time this. I don't think it's going to be this gradual kind of like, oh, right now we're at 9, and then we go to 8, and then we go to 7, and we go to 6. It's like exactly like you mentioned. It's like whoop, it just switches over, and that's going to take people completely by surprise. And yeah, and then I think the market's going to react quite violently to that. So just kind of keep that a bit in mind. I think that's the main part I want to mention here. I do want to, now that I when I pulled up that Elon screenshot there from him talking about prices here, inflation might be trending down. I did see his dogs again. Where is it? Let me scroll up. He doesn't miss out a moment on. Come on, one of Doge too, please. Where is his dogs running around? Here. It's so. I mean, he doesn't miss an opportunity to shill Doge. Yeah, I do think it's quite cute though how he, plays with his son and stuff. So that's quite nice. Yeah. Here. Yes. Great. Anything you wanted to add here? Because what I still want to show were a couple of charts that I'm gonna walk through and discuss. I think the first chart here I want to mention is the blue line is retail, the green line is the whales. And one thing that is really, really important to kind of just understand a bit on the Bitcoin supply. So really talking Bitcoin supply. Over this entire kind of year, whales, Bitcoins being held by whales have been trending down. And this is the source data from Glassnode here. The Bitcoins held by retail has been trending up. And so why do I just want to mention this? I just want to mention this, and this hasn't reverted over the last months, for example. So this hasn't reverted in July. The reason I really want to mention this is that obviously, for some reason, whales are not buying this dip at the moment. Retail is, right? And so I think that's really, really key. And I just want to bring up something. This is the entire .com crash here, right? Started in the 2000 and basically took about 3 years. During this entire crash, you always had these massive rallies up. And these massive rallies, they were like 20, 30%, right? So that's general markets. So just imagine, this is general markets. What do you think is this going to do to crypto, right? Crypto is like a leverage on that. So you could say, oh, back then, like 20 years ago, the NASDAQs, they are like crypto today, but I still think there's way more volatility in crypto today. So if those things sometimes went up by like 20, 25%, crypto, let's say Bitcoin, right, as like the mother of all cryptocurrencies, easily can bounce 50% up, right? So that means we're at 20, we could easily bounce up to 30. That doesn't mean we're now in a bull market. This is just this typical kind of like bear market, and there's like this rally in a bear market. And that also means that like altcoins, obviously during this time, can easily rally. I mean, if Bitcoin goes up 50%, alts easily can do 100% during this time, right? So why am I telling you this? I'm just telling you this not because I actually believe we're going to see that much downside this year. I'm just telling you this, that you just have to be really, really cautious. And Fabio, you mentioned this tweet by Udi Wertheimer, I think a couple of weeks ago, where he said maximum pain is not going down to like 17,000. Maximum pain is going up to 30, dipping down to 15, going up to whatever, 50, and then dropping down to 10, right? Like really kind of fooling everyone. And I mean, the numbers here are just extremely strong and dangerous in believing that this is the start of an entire bull market. This is the great financial crisis of 2008. And here as well, I mean, this entire thing took 2 years to really find its bottom. We are in this now for 9 months, right? So many times when we are talking about how this entire thing could take, I don't know, until the end of 23, and in between we have these massive kind of moves, then just be really, really sure that if you are starting to dollar cost average into the market, and I mentioned this, I think, 2 or 3 spaces ago, that I have started to dollar cost average into the markets again. And I'm doing this step by step. And I'm not doing this because I believe tomorrow, like the market's going to rally and like this thing is now shooting up to 60,000. I'm doing this just because I think over the long term, these may be great prices to get in. And this is just what I would highly recommend to you, right? So that you don't go and see these as like these super short kind of moves, but you see this really long term. And yeah, things like Taiwan at the moment, I think that's just going to put some like oil on the fire, but it's not necessarily at this very moment. I mean, at the moment we're talking about people talking on social media and kind of posting threats, but I mean, there's no action being taken, right? I mean, at the moment, as far as I know, China didn't take any military action, and Taiwan didn't have to do any military stuff, and the U.S. didn't have to, right? So at the moment, it's all just talking. Again, maybe in 2 hours when you listen to this in the recording, this may have completely changed. I just want to be very clear here. So I would not, see this much difference on all of that. So just wanted to kind of point this out a bit. Yeah, I don't know, Fabi, if you wanted to add anything on this.
Yeah. So what is important for me personally, there is so many influencers. They tell you this is the start of the bull market and we will never see prices under 20K again. And you have a whole other camp of people that say this rally, it doesn't have legs and we will definitely go down and we will visit 4-digit prices and everything. But I think what is really important to iterate, nobody knows. Like the bottom could already be in, or we could go lower and this rally doesn't have legs. The most important thing, and where it comes down to, and this is what Julian mentioned so many times in the earlier part of this year, when prices were a lot higher than they are right now, is that what you as an investor, or what we all need to try to do, is to not be wrong. And if you like, for me, example, I have a long time horizon. I'm in this. I can easily hold for 5 years or for 10 years, because the money that I have invested in Bitcoin or in cryptocurrencies, and also into other things like stocks and bonds and gold, it's not money I need. This is money I put away for in the hope that I might be able to have an early retirement. So I have a time horizon of 10 years. But there is a chart, and when you so there is this saying that a lot of people say, time in the market beats time in the market. And I would say this is factually not true, because over the last 100 years, you had periods of times when you were waiting 15 to 25 years for a break even. So if you were just buying, for example, the S&P 500 index or the NASDAQ, there were actual times when you bought a top that you needed to wait 15 to 25 years for a break even. So this is even for people with a very long time horizon. This is a very long time to wait. And I think Julian made an example of the .com area. And I think the NASDAQ, I don't know the exact number, but I think it was 10 to 15 years for a few stocks in the NASDAQ, or the NASDAQ itself, to have a break-even moment. And just by going here and reiterating the argument that Julian made of trying not to be wrong. So the worst case scenario I need to prepare myself for when I invest in tech stocks, or when I invest in crypto, which are clear risk on assets, is that it might take 10 years for me to break even if I bought the top. So if I bought at 60,000 or so, this could be a long period of time I need to wait. Now, all of us know 1 year in crypto is like 5 years in the real world. So I wouldn't say that in crypto terms we need to wait 10 years, but this could be true for the stock market. And we see really, really high valuations, especially in tech stocks. And it is a very different or a very difficult area to navigate as an investor. And for the people, if you know how to what will happen, you're probably like, I think you made this argument as well. Like there are so many people that are asking a lot of money for their trading courses or for their markets insights. If those people really knew where the market is headed, and if they really are knowledgeable in trading, why would they offer you a course? Because all they could do is allocate capital and profit without needing to share their insights with anybody. So take everything we are saying here with a grain of salt. As you that are listening right now, the listeners, we are also just trying to navigate these waters and trying to figure out what's true or not. And we the nice thing of these Twitter Spaces is that we kind of can do this as a group, and also profit, of course, from Julian's insight. Yeah, because you're much deeper into that markets, and you have a few really nice connections to very influential and worthy people. Yeah,
I try. I mean, one thing that was just sent to me, so I want to share this. It's actually quite. I don't know. Again, this is social media, and I think one thing I just wanted to highlight is the crazy part in all of this now is that you don't know who to trust anymore, and this is just insane. And it's like you see something in the news, and you're like, the first thing is like, okay, what political party is this news affiliated with? Is this like left? Is this right? Is this pro China? Is this against China? Is this pro US? Is this against US? It's so insane that like you cannot listen to anything anymore or watch anything where afterwards you're not like, oh, this is just completely politically motivated. It's just so dangerous. But so here's one thing I just want to share. I think this is like quite pretty bonkers. So city of Xiamen is about 200 kilometers away from Taiwan. So just to zoom out, that's very much east coast of China. So let's zoom in here. Here at the bottom, you see about the scale. So it's about 200 kilometers, right? Maybe more, let's say 300, let's say 400, just to be safe, right? So you can just look this up yourself on Twitter. And then you can, again, who knows if this is really like what's happening right now. So you have like, I don't know, dozens or even hundreds of tanks kind of rolling up here. You can zoom down. Again, these are, it's so difficult to say, is this fake or not? Who knows, right? I mean, one person posts something. I have no freaking clue which city this is, right? I don't even know if this is China or not. How am I supposed to know? I haven't been there, right? So this is at the beach. Who knows, right? I mean, they say this is Xiamen City. What do I know? I mean, look, I see a tank, I see a beach. That's it, right? And it's just so difficult to know, but it's like insane. So who knows, right? This may be that, obviously they're constantly sharing the same kind of footage here. And so it's just super dangerous to then go and say, oh, this is exactly it. But obviously, it could be now that China is kind of really rolling everything up and goes like full bonkers against Taiwan on this. Could also be this is just absolutely fake news. Yeah, and it's just the crazy part is like, who knows, right? Again, no one knows where this video is from. It's watched 60,000 times in like the last hour, and I'm sure it's gonna go viral pretty soon. And so that's just the really crazy part, in all this, right? So 8 minutes ago, you see massive amounts of tanks. Who knows? I mean, here, it's I don't know, just I don't know, very difficult always to judge this. But I mean, for me, right, and that's kind of my finish to that. And then I don't know if Fabio, if you have anything else, is obviously this just highlights to not try to trade geopolitical events. Very, very difficult. Be always super cautious in believing that markets can turn around on a spot, especially if the Fed is not the one pumping the markets. This was the main reason why in 2020 the markets pumped so hard, or in 2009, 2009, 2010, the markets started pumping so hard. Don't forget that. And yeah, just be extra cautious on all that. Obviously, fingers crossed that this Taiwan conflict doesn't escalate regionally, doesn't escalate for the entire world. I mean, there would be nothing more insane as a head-on-head conflict between the U.S. and China. I think none of us would win in this, right? So this is like absolutely insane. Fingers crossed to all that. So that's kind of a bit of my final kind of thing on this. I don't know, Fabi, if you have anything else, but that's kind of for me.
I shared a meme in the Twitter space on top, and this is the funny thing. So Julian practically took the other side of that meme, because to navigate the social media of the current times, it's so difficult, because if somebody makes a factual statement, so the meme that I shared for everybody that's listening and doesn't see what I actually shared, it's a guy that says 2 and 2 equals 4. And there's another guy on the other side, and he says, "Where is the source of this? This has been debunked. The experts say something different." And has all kinds of arguments that this statement of 2 and 2 equals 4 is not true. And the same goes the other way around. So Julian just showed on the video, we're also doing this, we're going to upload this on YouTube. He showed some social media footage that clearly showed tanks moving, but you don't know when this was recorded and why they are moving. So factual information, you have a lot of people that are claiming certain things that this is not true. And we have this postmodern movement that is practically going to question everything. So this is the discussion we're having. What is a recession? And not to be political, but there's also several other discussions, like a movie that came out this year that is called What is a Woman? Where there were statements or things that we took for granted, like 2 and 2 equals 4. But you have a whole kind of counter movement that questions all these things we took for granted, but that we thought are factually and true, that there's this one reality, or that this one truth. So it goes both ways. You have a lot of fake news that are clearly fabricated and not to be believed in any way, but also you have things that are actually true, and there is practically no way to refute them, but people question them anyway. So I find it incredibly hard to navigate through social media, through the media landscape, through watching TV, reading the news, reading Twitter, reading social media, and finding out what is actually true and where are we going. And everybody makes this difficult. In the beginning, we briefly touched on that regarding the recession, that the White House actually changed the definition before they released the GDP numbers. And I think there were 85 attempts to edit the Wikipedia page for recession. Some parts were changed, some parts didn't. But where do you go if you want to have clear information? I would have said Wikipedia is a good place to go, or the website of the White House is a good place to go. But yeah, so even the things that we consider to be 100% true or source of truths are no longer. So yeah, super interesting times. Like I have to say, I'm sometimes a little bit obsessed with following all the things that are happening. Yeah, we have pole position, first row seating to follow along with all of the things that are happening. It's super exciting.
Definitely, Fabio. Really appreciate it. Thanks for taking the time. Thanks for organizing this, setting everything up. Yeah, always trying to look at this as neutral as possible. I think that's also what people appreciate. Again, you being Swiss, myself living in Singapore, I think we're getting true to the nature of why these two countries are so successful. So yeah, we kind of, I think, embodying that, or yeah, kind of representing that. So yeah, that's really good. With that, yeah, I hope you get value at this. If you do, then please on Twitter, subscribe, follow. If you're watching this on YouTube, click the like button. Obviously, subscribe as well. On the podcast, same thing. And I know we're putting out little pieces on various social media channels. So hopefully you get value out of this. And if you're not a customer yet, go to cakedefi.com, become a customer. Use our promotions that we always have going on at the moment. There's this D-token promotion, I think quite exciting. Yeah, and I hope you benefit from that. With that, I really want to wish you a beautiful Tuesday. Next week, really important. There's National Day on Tuesday, so there's not going to be an update on Tuesday. We're going to do it on Thursday, because Wednesday is the first day back in the office for all of us in Singapore, which is going to be obviously a bit chaotic. So we're going to do it on Thursday, the 11th. And also, we're changing time. We're going to go at 12 p.m. Europe time, 6 p.m. here in Singapore. And we're going to continue that time. That is actually more of a personal reason, because me having 3 kids now, I need to have 30 minutes earlier off because I need to take care of the kids here at 7. Otherwise, it gets a bit too late. So with that, thank you so much. Stay safe, stay healthy. All the best. Talk to you next week. Thank you. Bye-bye.